Hello guys, and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analyzing the NASDAQ 100 and kind of just speaking about the markets in general going into this new trading week. Now you're probably thinking, why is Max posting a second video with regards to the NASDAQ 100? Because I posted one on Saturday morning yesterday, and that's because I've been having a hard think over the weekend. I've been doing some research and I found something very interesting which I would actually like to share with you all. I've got my calculator out and I've just been tapping away, and I've actually drawn my own chart, and I think it's got some really interesting data. And you know, the purpose of this YouTube channel is, of course, it's to make a living, but on the other side, it's also because I really want to help the retail traders improve their trading skills. You know, there's so many stories out there with regards to retail traders who have a bad experience trading or have lost money, lost their life savings. And if I can just help a few of you guys being my viewers, perhaps preventing you from losing your life savings, for example, then this YouTube channel was definitely worth it. So, you know, this week is massive from my point of view. We've had a massive dip in the market. Most people right now are going crazy. There's a lot of fear in the market at this moment in time. I wish that there was a fear index for the indices like there is over in the crypto markets, but unfortunately there isn't. But if there was a fear index from 1 to 100, I think fear right now would be at around 2. Because the NASDAQ 100 is down 14% so far this year. That's in the past 3 trading weeks, and of course this week alone we've had one of the worst weeks since 2018, where the NASDAQ 100 has fallen 7.5%. So investors are really worried, and I come out yesterday and I use my video as an opportunity to kind of explain that this is quite normal what's happening in the market right now. For those who haven't seen it, let me just take you to that YouTube video. It was this video here where I brought up this graph, and I picked up some numbers here. I got data from 1928 all the way through to 2021, and it shows that 95% of those years the S&P 500 sees a 5% pullback or worse. And of course 10% or worse, so that would be the NASDAQ 100, that'd be in this category right now. So still more than half of those years we've seen a 10% correction, and then of course when we go into a bear market, which is anything over 20%, that starts to become a little bit more rare. With only a quarter of the years between 1928 and 2021 putting back more than 20%. So what that chart kind of tells you is that what's happening in the market right now is normal, okay? Yes, you have the right to be very worried at this moment in time. I'm sure those who are trading on a leverage trading account are really struggling. I'm sure your margins are very close if they haven't already been bought out. This video also goes out to those who are trading on non-leverage. You know, I'm sure the majority of your portfolios at this moment in time are down 30, 40, maybe even 50%, maybe even worse. But mine is very bad as well. You know, I'm down around 30% overall, but this video is to try and persuade you all to not sell at this moment in time. And as I mentioned at the start of today's video, I've got my calculator out over the weekend and I've tapped away, and I've found some numbers that I think are really interesting, and I've put a chart together. So I'm just going to go ahead and put up that chart to show you all now. So this is it. I have got data from the S&P 500 all the way back from 1930 all the way to 2021, because the other chart was up until 2021 as well. And what it shows here is the price return in percentages, what you would have got back if you invested at the start of 1930. So the S&P 500 has performed 17,715% towards the upside. So you would have got 17,715% back from your money invested if you was to invested back in 1930, which is incredible gains, as we all know. And then I've also got the same data, but for example here in this category I've excluded the 10 worst trading days per each decade. So in 1930s I found the worst trading days and I excluded it from that data, and it would have given you a whopping 3.7 million % return compared to the 17,000. And of course I did the vice versa, where I found the 10 best trading days, and if you were to exclude the 10 best trading days, you would have only got 28% return if you invested your money all the way back at the start of the decade of 1930. 28%. And I thought, you know, the difference between these two figures is incredible. You know, compared to the 17,715%. Now, this number here, of course, is almost impossible to achieve. You'd pretty much have to have a crystal ball if you were to forecast what the 10 worst trading days were per year, and of course sell, and then of course buy the following day to achieve this sort of return. So let's just kind of forget about this at this moment in time. But the two key numbers that I really want to show you is the 28% and the 17,715%. This is very interesting to me because what a lot of traders do, a lot of traders are trying to chop in and out of the market. And of course, with a week like what we just had last week, and of course the previous 2 weeks, many investors right now may be in a mood to try and outsmart the market. Many investors at this moment in time might be thinking, you know what, I think the market's going to continue to trade downwards, and then maybe on Wednesday or Thursday it will go back up, so I'll buy the market there or I'll sell this day. Where the key is just to stay invested, and that's the whole purpose of today's video. It's very important that you stay invested, whether you're a non-leverage or leverage trader. Now, of course, you may be thinking, well, Max, I'm trading with high leverage and I don't have the pockets to keep depositing money into my account to keep my position live. And of course, I completely understand. But if that is the case, that means your risk management is wrong. Yes, there's been a 14% decline in the NASDAQ 100. If you bought up at those all-time highs, your account will be under immense pressure at this moment in time. But that being said, your risk management is definitely off if you are near to blowing your whole trading account from this 14% correction here in the NASDAQ 100. Second of all, if you're a non-leverage trader, then time is your best friend. Yes, you may have to wait a month or two for it to go back up near those all-time highs, maybe even longer. If you're trading with non-leverage, that means you can just sit this one out and wait. Please do not give into the fear index at this moment in time. That's currently been seen amongst many traders in the market, and start selling your positions. In fact, I've also found out some really interesting information that the 10 best days most likely come after the worst days that are seen in the market. So let me just repeat that, and just to clear it up a little bit. The 10 best trading days per year typically come after the 10 worst trading days. So what does that mean? Well, when you look at the chart and you see this means that typically speaking, we are due a bounce, because what did I say on my previous video? Well, I said that we are now considered to be extremely oversold here in the NASDAQ 100. The S&P 500 as well, we are now down all the way at 26. So we're incredibly oversold in both the NASDAQ 100, the S&P 500 and the Dow Jones 30. So we are due a bounce. And that being said, guys, as I just mentioned, overall on that chart, that the 10 best trading days typically come after the 10 worst trading days. So we've had an absolute hammering over the past couple of trading sessions, but as I just mentioned, we are due a bounce, and when we do bounce, it will likely be an incredibly strong amount of buying pressure towards the upside, and we should hopefully have a very strong trading session. So that's why it's so important for all of you watching today's video to remain invested. Do not be selling at these lows. I mentioned in my previous video that I posted yesterday that you're starting to see many news articles out there where some big traders on Wall Street are coming out and saying that the S&P 500 could crash, it could fall 40%, 45%. I think on Friday we had someone come out and say that the S&P 500 is going to fall 45%. This was the article that I was reading that was published on Friday. Here we are. A guy called Jeremy Graham said that the stocks could drop up to 45% in the market. And these are the type of articles that you want to be seeing at this moment in time. It's just panic the retail trades, panic the people like myself and you, so that we sell our positions and we create more value for these big top Wall Street investors, whether they're hedge fund managers, bankers, to come in and buy these dips and create even more value. So the purpose of this video was just to come out and say is to stay invested. Don't be giving into the fear. Don't be selling your positions down at these lows. Stay invested, because as I just explained, the best 10 trading days typically come after the 10 worst trading days. So it's very important to be invested, even though it's very scary at this moment in time. I completely understand, but as I mentioned, and I went into more depth with regards to the fundamentals for the NASDAQ 100, and if you guys haven't watched that video yet, then I definitely suggest that you go and give it a look, because I go into real depth with regards to the NASDAQ 100 and the Fed, etc. But nothing's really changed at this moment in time. Interest rates are still at a record low. Yes, inflation is high. The Fed has only really come out and said that they are going to start to taper and to hike interest rates, but it's been Goldman Sachs and JP Morgan that have come out and exaggerated it, in my opinion, and said that we need to rate 5 to 6 times. Well, I think that we're only going to go up 3 times this year. We're only going to see 3 hikes, and of course the market right now, as we currently speak, has already priced in 5 to 6 hikes. So as soon as we get that upward surprise, when Jerome Powell comes out, hopefully on Wednesday, and says, well, hang on a minute, who said 5 or 6 hikes, and strikes a more dovish tone, that's what could trigger a massive jump towards the upside here for the NASDAQ 100. So it's very important that you guys are invested for that jump when it does come. I don't know when it's going to come. Your guess is as good as mine. It could be Monday, could be Tuesday, could be Wednesday. I don't want to put a time on it, but I'm very optimistic that we could see a nice bounce in the market going into this week due to the fact the stock market is incredibly oversold. And then, the question comes, will we just go and double bottom, revisit the lows, or will we trade back up towards the all-time highs? And the answer to that question is I do not know, but we're going to take it day by day. Of course, I'm going to be on YouTube here to help you all. Just to finish today's video, I thought it would be really interested just to basically show you this chart and show you the math that I found. But I thought it was really incredible to see that traders who would have missed the top 10 days per decade would have only returned 28% over the past 90 odd years trading. So that is an incredible stat. And investors who are going to be closing their positions at these lows, those who close their positions on Friday, will likely come under this category because the fear gets to them and they close their positions at these lows. So it's very important to stay invested so that you can take advantage of those best days, and of course eventually it will help you have a very good return. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.